Welcome to The Explainer. Today, we're diving deep into a literal heavyweight on the global financial stage, Sumitomo Mitsui Financial Group, or, as it's better known, SMFG. They're Japan's second-largest banking group, headquartered right in the heart of Tokyo. But right now, this absolute financial titan is sitting at the center of a fascinating market contradiction. So here's the deal. We're looking at a classic bull versus bear scenario. On one hand, you've got this massive institution that is absolutely shattering its own profit records left and right. But on the other hand, we're seeing major analyst downgrades and a growing, very real sense of caution on Wall Street. How can a bank be performing this incredibly well yet face such rising doubts from the experts? Well, that is the megabank paradox we're going to unpack for you today. To really wrap our heads around the stakes here, we got to talk scale. We are looking at a market cap of roughly $156.8 billion. They trade on the Tokyo and Nagoya stock exchanges and as American depository receipts over on the New York Stock Exchange. Now, interestingly enough, for a company this massive, they have a beta of just 0.42. That means their stock actually moves way less than the broader market, indicating lower volatility and, a potentially safer harbor for investors. They also boast a solid price-to-earnings ratio of 17.06 and may have been trading right up near their 52-week high. Honestly, this is not some small, risky startup. This is a foundational pillar of the Japanese economy. Here is the roadmap for today. First, we'll meet SMFG, the megabank. Then, we'll jump into their record profits and rising rates, followed by their strategic vision and growth plans. After that, we'll cover the market outlook and key risks, and finally, wrap things up with some final thoughts and takeaways. All right, part one, meet SMFG, the megabank. If you follow Japanese finance, you already know the sector is dominated by the big three megabanks. SMFG sits right in this elite trio alongside Mitsubishi UFJ and Mizuho. Through its core banking subsidiary, Sumitomo Mitsui Banking Corporation, along with their leasing, securities, and consumer finance arms, SMFG is just a massive economic engine. And right now, that engine is running red hot. Together, these three megabanks just reported a combined totally historic record profit of 5.26 trillion yen for the year ending March 2026. That is a staggering 34% year-over-year increase for the group. Moving on to part two, record profits and rising rates. Just think about the sheer velocity of this growth for a second. For the full fiscal year ending March 2026, SMFG reported a record net profit of 1.58 trillion yen, which is up from 1.18 trillion yen the previous year. Again, a massive 34% jump. And they absolutely aren't slowing down. For the first quarter ending June 30th, 2026, SMFG posted another 33% jump in net profit, hitting 501.4 billion yen. That's over $3 billion in just one quarter. They completely blew past the Bloomberg consensus estimates, and total income rose over 16%. So what's actually driving this massive windfall? Well, it essentially boils down to two massive structural tailwinds. Step one, Japan is finally undergoing a historic shift away from negative interest rates. The Bank of Japan has hiked rates by a cumulative 110 basis points since early 2024, pushing the policy rate to 1%, literally the highest level since 1995. This instantly widens the spread between what SMFG earns on its loans and what it pays out on deposits, which gives a huge boost to their net interest income. Step two, heightened global market volatility has caused global trading activity to completely surge. SMFG's Global Markets division is capitalizing on this heavily. In fact, leadership just set an aggressive target to double revenue in their sales and trading business to 800 billion yen over the next few years. Which brings us to part three, strategic vision and growth plans. With all this cash pouring in, the obvious question is, how do they keep the momentum going? Under President and Group CEO Toru Nakashima, SMFG has a very clear brand new playbook. They've set an incredibly ambitious target to increase profit by about a third, aiming for 2 trillion yen, or roughly $12.5 billion, with a 13% return on tangible equity within 3 years. But here's the absolutely crucial point. Nakashima explicitly stated that this growth will come without large-scale acquisitions. This is a massive pivot for them. It signals a huge shift away from the bank's previous appetite for billion-dollar mega deals and moves them entirely toward internal efficiency and organic growth. This new playbook, it's built on 4 main pillars. First up, efficiency. They're doubling their generative AI investment to 100 billion yen over 3 years to weave AI into literally every single operation. Second, trading.
They're heavily leveraging their strategic tie-up with Jefferies Financial Group, where they actually hold a 20% stake, to help double that sales and trading revenue we talked about. Third, rewarding investors. They just knocked out a 180 billion yen share buyback, canceling 28 million shares in August 2026 to boost capital efficiency. And they've even approved a 2-for-1 stock split. Finally, expansion. They are aggressively moving into private credit and are currently in talks with Nippon Life Insurance to launch a fund with an initial capital of at least 500 billion yen to finance corporate acquisitions.
Now for part 4, market outlook and key risks.
With a strategy that robust, you'd think the stock was a guaranteed slam dunk, right? But why is Wall Street flashing caution signs? This brilliantly illustrates the exact divide we're currently seeing among experts. On the bullish side, the analyst consensus remains super positive. Goldman Sachs is maintaining a buy rating, and DBS recently reiterated their buy rating as well. The average target price sits at a very healthy $28.72. But let's look at the bearish side. In August 2026, Zacks Research officially downgraded SMFG from a strong buy all the way down to a hold. And just weeks before that, Weiss Ratings also lowered the stock to a hold. So we are seeing legitimate, undeniable institutional caution here.
The root of all this uncertainty is a massive gap in expectations. See that $1.81? That's the current analyst consensus estimate for SMFG's earnings per share. The $0.84, however, is SMFG's own earnings guidance for the current fiscal year. Think about that for a second. The company's internal projections are literally less than half of what the analysts are expecting. When a company's own guidance is that much more cautious than Wall Street's consensus, it inevitably raises eyebrows and sparks downgrades.
Because of that huge gap, analysts are hyper-focused on 5 specific risks right now. 1. BOJ rate policy shifts. If the Bank of Japan slows down or reverses its rate hikes, SMFG's lending margins will definitely compress. 2. They've been pretty slow in their cross-shareholding reduction. 3. Global economic uncertainty. Because they're leaning so heavily into global sales and trading, they're highly vulnerable to sudden geopolitical shocks. 4. AI analysis models have actually flagged SMFG's high balance sheet leverage and volatile cash flows as a real, tangible concern. And 5. Insider selling. Notably, the CFO, Kazuyuki Enchi, recently sold 4,000 shares at an average price of $42.47. Just to quickly clarify that second point about cross-shareholding, since it's a huge, huge topic in Japanese corporate governance right now, cross-shareholding is basically the practice where companies hold stakes in each other, usually to cement business relationships. But modern investors absolutely hate it because it traps capital that could be used for growth or returned straight to shareholders. The government has been aggressively pushing banks to unwind these stakes to improve capital efficiency and boost stock valuations. The risk for SMFG here is that they've been moving slower than their peers in getting this done, which analysts believe could be dragging down their stock from achieving a much higher valuation. Finally, Part 5, Final Thoughts and Takeaways. So to sum it all up, we've got record profits and a really sharp strategy going head-to-head with super cautious internal guidance and some very real macroeconomic risks. Going forward, if you're following this company, your focus needs to be laser-targeted on these 3 critical questions. First, will the Bank of Japan actually continue its tightening cycle? Reuters polls show analysts expect another hike to 1.25% before year-end. But any shift there will instantly impact SMFG's stock. Second, can CEO Nakashima actually hit that massive 2 trillion yen profit target entirely organically without falling back on major M&A deals? And third, will the company successfully accelerate the reduction of its cross-shareholdings to satisfy investors who are demanding better capital efficiency?
And that leaves us with the ultimate question of the megabank paradox. Is Sumitomo Mitsui Financial Group undeniably benefiting from a massive structural tailwind, a historic Japanese resurgence fueled by the great escape from negative interest rates? Or, given their cautious internal guidance, the high balance sheet leverage, and those recent analyst downgrades, are we actually looking at a leveraged risk sitting right at its absolute peak? It's a fascinating financial puzzle for sure, and definitely one that warrants doing your own deep research. Thank you so much for joining me on this explainer, and I hope this clears up the complex landscape surrounding one of Japan's biggest financial titans. Keep learning, and I'll catch you on the next one.